Welcome to Key Points for December. This month, our take on the much better mood around economic growth prospects, why we've become more cautious on the equity markets, and why December the 11th is an important date for your diaries. So turning to that first point, there is no doubt that the mood around economic growth prospects has improved quite appreciably over the last few months. You'll remember back in the summer, people were worried about the inverted yield curve as a harbinger for recession, the implosion in industrial production, and the angst around the trade fight between the US and China. Now, much of that seems to have dissipated, but unfortunately, we think that is misplaced. When we look at the numbers, yes, some of the manufacturing indicators are looking less bad, but it still implies the manufacturing part of the global economy is continuing to contract, just at a slightly slower pace. But importantly, that manufacturing sector is having a gravitational pull on a much larger services part of the global economy. And there we see, admittedly, growth, but that growth is slowing quite dramatically as we move throughout the course of 2019, and we think that will continue into early next year. So we're more cautious on the growth outlook than I think the consensus currently stands. Now, turning to our second point. Back in the summer, we had actually become more optimistic about equities given the pessimism that surrounded markets and the economies. But now markets have really done very well. Most markets are up about 25% year to date. And we suspect that things are getting a little bit long in the tooth. We think there's a pause perhaps likely to come in the weeks and months ahead. The Santa rally has been important, as it's now known, as we get into year end. November was a very good month for global stocks. But we think actually, although momentum could continue for a little bit longer, we're due for a bit of a pullback. Certainly we've got away from the moving averages, an indicator that we look at, and our proprietary tactical indicators are giving us a warning signal to be a little bit more cautious on the equity outlook from now on, given the very strong gains that we've had. So to our third point. December the 11th is an important date. While most people in the United Kingdom will be looking at the general election on December the 12th, December the 11th is the date that we'll be publishing our global outlook for 2020. Will the US suffer a recession? Can China avoid a hard landing? What will the Fed be doing? And from a market perspective, will bond yields have bottomed and be rising? And will equity markets suffer any kind of severe correction? All of this and much more is in that. And all of our publications, of course, are available on zurich.com/MSME.